Centene CNC is one of the biggest healthcare insurers trading below its book value. In this video, I'll walk you through its financial statements, what's going right, what's going wrong, the recent news, price predictions, and my own positions in the company. I'll walk you through, do I think this is a rare bargain on the market? I think so. All right, let's start off with a quick refresher. Centene is a major player in government-sponsored health insurance. As you can see here, they're one of the biggest in Medicaid, Medicare, and ACA marketplace plans. They operate in many states. They manage risks across large member bases and deal with government rates and regulatory rules. Because they're in the business of predicting health costs and reimbursement, margins and risk adjustment matter a lot more than any other kind of company that I'm going to be looking at in the future. And let's get into some core metrics that I want to give you a look at. The valuation I'm seeing is the PB book ratio is reported at 0.62 to 0.67. That means the market is pricing the company below the net value of its assets minus its liabilities. Other valuation metrics you want to look at here as well is the PE ratio is very low, as my valuation showed it to be 8.6, and the debt to equity is very moderate at 0.64. These numbers suggest that the market is very skeptical of future profitability despite a seemingly cheap balance sheet, which shows that they're continuing to grow and they're going to continue to bounce back from all these setbacks that they've had in the past. So let's see what's under the real hood of the company. We've seen in the last earnings call Centene reported a adjusted loss of 16 cents per share, which missed expectations of 23 cents per share. Revenue, however, came in strong at 48 billion, which beat all forecasts. There wasn't any prediction that predicted it that high. The main issue here, though, is the medical costs, which is kind of the benefit payout ratio, which is how much each premium dollar goes to converting healthcare services. Some reports say the health benefits ratio is right now 93%. So that is very high for a company even this big. And that cost can kind of erode the margins fast for a company like this, where they're constantly cash intensive and really needing as much money to continue to grow. Also, earlier in July, Centene withdrew its full year 2025 guidance, citing data from marketplace operations showing morbidity, sickness rates higher than assumed. That withdrawal triggered a massive sell-off, as you can see on the screen here. The stock dropped 30 to 40% in a single day, and that was around the time when I first started picking up into the company, and I noticed how undervalued it truly was inside of the healthcare scene, and it's only continued to go lower and lower, especially with the United Healthcare stuff going on, and it's really undervalued right now as a company to where there's no reason it should be this low other than people worrying about the risk in the future net value, which we can see by the stats here, as the PB is at that 0.62, which I showed you, and the PE ratio is very low, which shows that people are very pessimistic about the future of this company. And with their current ratio of liquidity, it looks very tight, and it looks like there is very little marginal short-term buffer, and they have time to continue to fix the problems that they are having and grow the company. The one problem is that for every dollar in premium, 93 cents is going into claims, which leaves little room for admin, profit, and risk adjustment. So in my opinion, if the benefits ratio climbs, then we'll struggle to turn a profit. But I doubt that will happen. It seems like they're already finding ways to re-leverage this, and the low liquidity means less cushion in bad quarters. But in the next few quarters, I'm feeling good quarters are coming, and a lot of the healthcare that is in the U.S. is getting focused into companies like Centene. So one of the main things, as I mentioned before, was the guidance sell-off. The market reacted badly when it withdrew the guidance, expecting worse data in 22 states. The mini tender offer also was made in 2025 for the August. Is the firm TRC Capital made a tender offer for up to 4 million shares at 24.75 million. 24.75 a share. Centene advised shareholders to reject it, which shows that they feel that price is way too low and they do not want to be invested in at that level. Not only this, I want to point out that there is a securities fraud class action pushed by recent laws alleging institutional alleging misrepresentation in disclosures. And this is sort of a problem, but we see this with a lot of companies. Personally, I'm one of the biggest investors in ASTS Space Mobile, and we've seen this happen before, and it's usually happens right before a stock is right about to take off and hit new all-time highs. Not only this, but we've seen capital companies acquiring shares, showing institutional interest, and we've had guidance reaffirmation from earlier that the company has reaffirmed parts of the 25 guidance above consensus, giving the stock a boost as to where we are now. But it's still not high enough because they've been awarded awards for health efforts, and they're continuing to make revelations inside the revenue of the company. Not only this, I want to put to the pros of the company. Here we got, if things turn around, here are the potential upside drivers. The normalization of medical costs. If the health benefits ratio can even say, let's say, drop from 93% to even 90%, that's a huge margin that opens up. And not only this, but there's better membership and risk mix. There's regulatory and policy tailwinds. So if the government increase our risk adjustment formulas benefit insurers, this could create a benefit for the company. Not only this, but the book value recovery. Since the stock is below book, improvement in fundamentals could lead to multiple expansion that could see the stock grow even 50 to 100% in the next few months. Not only this, but the institutional confidence. If more large funds start buying, that could sustain the momentum that we've been seeing the last few months. So in the end, I'm seeing this. It's a very high risk name. There's a lot of high medical costs, and the costs are going to maintain elevated, but they're going to find ways to move around this and continue to lock in the margins that they need to grow and have a good stronghold in the market. One of the other problems is the regulation. Due to changes in Medicaid, government health policy, this could always hurt the revenues or the reimbursement. But we got to look towards this not happening. And I think with Trump in office, it will be main thing to watch at. And not only this, but the risk adjustment / actuarial surprises. If the company misestimate how sick their members are, you could have unexpected losses happen. Here are some of my price predictions, and even though like the sentiment is negative right now, I have these are all my base case is literally undervalued by 36%. My best case is undervalued by 82%, and my worst case is still undervalued. And that just goes to show how really this company is undervalued at this level today. And in a year time, I think we'll see way higher prices, and I hope we can look back at this video and be like, oh man, this was a no-brainer stock. So while Centene might be deep kind of play, what you're going to want to watch looking forward is the HBR / medical loss ratio trends, the enrollment and membership growth in marketplace, risk adjustment payments and government reimbursement, upcoming guidance updates, analyst revisions, and regulatory changes in Medicaid. So here's my position personally in Centene. I don't have too many shares. I kind of swung trade a little bit when it was really low. I think it hit even 24, and I swung some trades all the way up to 31, and I sold those, which seems silly now that I've done a deeper dive into the company. But I really do believe in the company. I'm looking to expand my position in it, and I do think it is a value gem that we do not that the market hasn't really taken into account. And I think it's hard because of all the recent stuff with the healthcare and all that we've been seeing all these stocks get beat down, but there's still good companies under the sub zero point 0.1 healthcare names. So if you want me to check out any more stocks, leave a comment in the comments below. Make sure you hit a like, subscribe, and if you want any more stocks, drop them in the comments. I'm always ready to give some updates. Thank you.